Okay. All right, what's up, everybody? I was ready to go short some Zoom. I couldn't find my way in here. Thought it was another debacle. All right. Before we get rolling, first off, I'm not even going to go to the page, but I'll just do this because I don't want to start moving things around here. I'll go to it after if anybody needs it. All right. Anybody who is new, first time on the webinar, welcome. You have any questions? You're looking for any additional information on some of the lingo I use, anything, go to wallstreetjesus.com and you can find a lot more information there. Okay, you have any questions, hit me up after the webinar because I have a tendency to forget. Let me take this off here too. Okay. The other thing I wanted to mention on this webinar, and it's a perfect day for it, before this ends up, excuse my French, but a complete shit show. If you're looking for the person you can ask whether you should buy Tesla up 350 points over the last 4 days, I am not that guy. Okay, if you're looking to buy Amazon now that has gone to new highs and Jim Cramer's doing cartwheels, I'm not that guy. Okay, so, right, space only for you, Nick, only for you I could talk about space. But I'm being honest because, you know, if we did this webinar yesterday as opposed to today, I would have enjoyed it a lot more. You know, especially with some of you newbies out there. All right. So I'm not even, I mean, we could talk about some names towards the end before we wrap it up and look at, you know, some of the nice moves that happened over the last 2 weeks. But other than that, I'm not, who's that? How about shorting the hell out of this rally? There you go. He obviously knows me well, whoever that is. But I don't want to talk about names because I think it's kind of useless off today's action. All right, and we'll talk about the reasons why. Oh, who is that? Who is that? Who? Etordelne. I don't recognize the name. That's why I don't know it's somebody who knows I don't short. All right, you guys, it's like the Italian soccer team on here. I don't recognize any of these names. All right, so let's talk about the more important stuff. All right. If you have been, and I know there are obviously a lot of members on here, okay, so that makes my job a lot easier. But if you have been on the last few webinars, you know what we've primarily been focused on, right? What we've been talking about, okay? And just to rewind quickly, because I think now we are going to start to, can you guys stop cracking jokes while I'm in the middle sentences here and I'm laughing under my breath? What I think we're going to transition to, okay, we're going to start to see, in my opinion, something different take place. We're getting close to that point now, okay? But if you remember, go, I don't know, how many weeks is it now? 3 weeks, right? Back to where we were on these webinars trying to drill in our heads, all right? We're going to stay focused. The news is only going to get worse. The headlines are going to be abysmal. The noise out there is going to be disgusting, okay? But we have to remind ourselves of the more important things out there, which are our key signals, right? Sharpies are buying, see where sweeper money's going, and sentiment, the riffraff, is extremely bearish. All right? So, like a mantra, over and over and over again, we wanted to drill that in our heads because in the heat of the moment, and I see it all day long in the steam room, every little down tick or every headline there's algo selling off of, there are people jumping out of their bloomers to get short thinking the end of the world's back in play. All right, so that's what those signals are for. Okay, they're to remind us of what we should be looking at. All right, and for those of you who don't know me and don't know why I'm a big proponent of these signals, both on out of sentiment and flow, is because I came to the realization pretty early in my career, okay, that I wasn't going to be the next Jesse Livermore, right? I wasn't going to be that trader who is going to knock the cover off the ball, trading off his instinct, his emotion, and his psychology, okay? I was wired the wrong way. And what made me see the light, I think, early on was that I didn't feel too bad about it because the stats, right, made me feel normal, right? The statistics, if you look them up, would tell you that 90%, so 9 out of 10 people who attempt to become quote unquote traders fail. It's true. Okay? So I got news of you for you, all you guys in here and gals. 100 of you in here, okay? 100 of you. If that's the route you're looking to take, 90 of you aren't going to get there. Now you can say, oh, but not me because I can do this and I can do that. Or like you've heard me talk in the past, you come to the crossroads in this game where you realize that you're not going to find success doing it and you have to take a different approach, okay? So I don't want to get into all that because I want to talk about the market and where we're at and all, but that was a realization I came to pretty early on in my career, right? While I was looking and watching a lot of people fail around me, okay? So these signals, right? Once I acknowledge that anytime me physically, I feel like I want to buy something and I feel bullish, it's usually not the right time to do so, right? Usually when I'm pooping my bloomers and I'm scared with everybody else and their mother that the coronavirus is going to turn me into a zombie, right? That's usually not the best time to short and probably a good time to start looking for long opportunities, all right? Those feelings are so effing powerful that me, okay, and I'm doing this for 22 years, I still need to get slapped upside the head and reminded by these signals on a day-to-day basis, reminded of what I need to do. Make sense? All right. And I see a lot, I see a lot of traders. I mean, when I was a broker, I used to see them live playing right in front of me every day. I see a lot of traders in the Steam room on Twitter all day long. And it's easy for me to see it because I've been down the path and I've been around for a while, but there's so many players out there that, they truly, really think they can figure out this game. They can outsmart the street. They can see something that the market doesn't see, right? But they end up on the same side of the riffraff time and time and time again. And that they don't realize. That they never realize. All right? When they see that short opportunity, they fail to realize that so did every other schmuck. And that's why sentiment is as bearish as it is. All right, so that's what the signals are for. Okay, they're reminders, even in the worst of times when it's hardest, because we're not wired. A lot of us aren't wired to buy when we don't feel like buying. Right? It's easy to buy, off a day like today, or when the market's at new highs and everything's been going up every single day. It's easy to get to buy something. But when the market's bleeding out and you have a little bit of rally and everybody's calling it it's just a bear market rally. It's just short covering. Don't worry. We're going to the S&P 1500. Don't be fooled. Don't be fooled, right? when everyone's singing that tune, even while you're looking, and I'm telling you from my experience, even while I have confidence, full confidence in the signals I look at, because I look at them religiously day in, day out, it still is difficult for me to put money to work and put it in action. It's almost like I got to push myself. I got to force myself in. All right. But that's ultimately, I mean, I don't know about you guys out there, but for me, like my goal, that's my goal, to get better and better at it each and every time I do it. Right. To the point, hopefully one day I feel totally comfortable where it just becomes instinct to me. Okay, but I'm being honest with you, it's not. It's not. I still have to push myself and force myself. Okay, so anyway, so that's where we were 3 to 4 weeks ago. Okay, right? We discussed that. We had sentiment fall into place. It got there first. Okay, then we spoke about how we want to see confirmation now, right? We know that everyone's all bared up. We know that everyone capitulated, has sold out, right? Everyone did what they needed to do. Now, what we wanted to see, okay, and that's the other side of our signals, we wanted to see the smarter money out there, right? Notice what we're noticing and start putting some money to work, okay? And that's when it gets a little easier. I'm not going to say a lot easier, but a little easier, okay? When the market looks like total hell and there's put action all over the place, okay? It's extremely difficult to find, for me anyway, to find something to buy. But if somebody comes in and sweeps $6 million worth of McDonald's calls, right? Me, like a little piker, I'm not going to cry over what I may put behind that bet with somebody sticking out their neck like that. So it becomes easier. So those are the confirmation signals we want to start to see when sentiment lines up, okay? And the more important one, which we were looking for and we got rather quickly, we must say, was the Sharpie money to come in, right? And for those of you who aren't familiar with the term, again, it's just the smart money out there, okay? The money that when markets go parabolic and every retail trader and their mother is doing cartwheels over the weekly calls that they own, they're hedged to the max and not concerned about benefiting from any further upside because they know what's coming, okay? That's why they're the sharp money. Okay, so one by one, they started falling into place, right? We had sentiment, then we started seeing Sharpie money, then we started seeing sweeper activity. And, you know, little by little, right? Time flies when you're having fun. Fast forward 3 weeks or 4 weeks, whatever it was, and we're here, okay? And the beauty about it is, okay, and this is what keeps a lot of the times these rallies going, okay? And we spoke about this initially, right? We were talking about that no matter what, okay, no matter how bearish you may be and you may swear to me the S&P is going to 500, okay? Jesus, I had Christ come to me in my sleep and he told me SPX 500, you can put it in the bank, right? Who am I to tell you that that dream, you're full of shit? I don't know, okay? But I told you from my experience, based off sentiment being this bearish, at the least, they will have to wash out a big portion of the bearishness out there, the bearish positioning out there, right? They got to wash them all out before your SPX 500 can come to fruition, okay? And this is the process of doing it, right? But what keeps this rally going, right, is the more you hear, oh, this is just short covering, this is just a bear market rally, it makes no sense, the fundamentals aren't there, the volume sucks. The volume sucks is my favorite one. That's my favorite. You know, it's my favorite one because you're going to realize, right, whoever is saying it and whoever you hear from, that markets, people capitulate and markets bottom on above average volume, right? When you see selling and volume explode, that's usually the bottom. So when you see the rally starting off like this with not much volume behind it, that's even better because there's no participation. Who cares if it's short covering, right? What do you got to give the money back because there's not a lot of volume behind the rally? That never made any sense to me. All right. So you hear these excuses and the things out there over and over and over and over. And all it comes down to, guys, is sentiment. That's all it comes down to. Okay. This market, like I said, may have predetermined that it has to go lower based on what we're going into, right? Maybe this coronavirus comes back in September and turns us all into zombies. We don't know. The market may know. We have no idea. All right, but what I do know is there's a high probability that when the market does do that, that you're going to see sentiment at least at neutral, if not at bullish extreme. Okay, so that's what it comes down to. It's not, there's no reason to try to predict. There's no reason to try to figure out, what this virus looks like. Nobody out there in the world can do that, okay? Not anyone we know anyway. All right, but that's the only thing that we need to pay attention to that actually means something, right? Again, and I'm biased, but I haven't found anything else over my 20 plus years, okay? Is sentiment and the sharper money out there who know a lot more than you and I. That's what it comes down to. All right. So let's go into, before we talk about where we're at now, and a couple things to look at. What I did here, so it doesn't sound foreign, especially to some of you new folks on here. All right. So here's what I mean by that. Okay. The sweeper activity, even if you're following on Twitter, you've realized over the last couple of weeks, I posted more and more call activity, right? Where there were a lot of days I wouldn't be posting any because there wasn't any, okay? Here's one graph on the Sharpie money, okay? So this is long positioning, right? I think this is just the S&P 500, okay? And the black line is the crew that we want to see buy, okay? And you can see, right, down here, this graph is not as good as some of the others we look at, but you get the idea. Down here, you can see, right, this is what they do. They put hedges on as a market rallies and extends higher, okay? So they're not interested in any buying, correct? Pretty evident. Here is the plus contracts, and here's their hedging. Okay, no interest. All of a sudden, whoop, market takes a bath. People want to get short. We hear Dr. Fauci talk about this is our Pearl Harbor, right? Donald Trump, out of all people, talking about 200,000 people are going to die, right? Boy, did it come to a head. Everyone lost their job. But you see how and there was a lot of negative things to focus on. Don't get me wrong, but it's all negative, right? The one thing that got swept under the rug, that probably is the most important out of all of it to the actual market, is the Fed rigged the game. The Fed, without anybody looking, right, with this, they rigged the game, right? They basically stopgap the whole world from going under. Okay, so that took any potential credit crisis or anything like that out the picture, completely out of the picture. Okay, because the Fed said, "Don't worry, we'll take it if it blows up, we'll buy it." All right, but with all the noise out there, nobody wanted to. It's hard to pay attention to that stuff. Okay, just like every other bottom that's ever happened. But you can see here, these guys pay attention. No, they find a way to pay attention. And lo and behold, right? Over a 3-week span, bink, 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 they get long. Right? Almost, I mean, this is almost max oil, basically. I got to take some of my red drawing off so you can see that better. Oh, geez. Hold on. Okay? But this is basically as long as you're going to find them. All right? So when those of you on Twitter or those of you who are new members or members who haven't been paying attention, this is what I mean and what other members are talking about when they're mentioning Sharpies buying. Okay, that's case evidence number one. Okay, then we have the other side of sharp money, right? Class, what's the other side? What's the opposite of smart money? The riffraff, right? Dumb money. Okay? And listen, you could think you're cool, right? You could think you're better than most. We're all in that pool. All of us. All of us. Okay? You know how I know is that I don't care who you are out there. You know, I'm not going to put my money next to your money if you're playing on how you feel, on your gut feelings. Because I know over the long run, you're likely to be a loser. Right? Just like everybody in Vegas, just like everybody you know who's attempted options, just right? Every degenerate ends up a loser. They don't lose every single time. Okay? But what happens is they have a tendency when they all agree and get on one side of the boat, it's an effing disaster. Right? It's an effing disaster. If a trade or a bet or a game looks that obvious where every single schmuck thinks they have a gift, right? A steal, the total opposite plays out. And in the market, it makes even more sense, right? Because it actually supply and demand. It makes up the market, right? So if everybody is short, if everybody's selling because they see downside, right? That means everybody already sold. And the likelihood is there's a lot of buying that could come in, right? And on the flip side, when everyone has already bought into the highs and everybody's already all in, right? The risk is selling enters the picture, right? Because there's nobody left to buy. Right? So the market, it makes even more sense than other things in life. But it's not a coincidence that the Sharpie money and the riffraff money end up on opposite sides. Okay? A lot of times the Sharpie money waits for the riffraff money to do their thing, and then they pounce on the other side. Okay? And that's what we have here. Right? So you could see here, okay, the red basically is Sharpie money, riffraff money trying to buy dips, okay? So every time this got into the red, they attempted to get long a dip. They thought it was a good time to buy, right? They thought it was a good time to buy. They thought it was a good time to buy, and then they gave up, and they went all in short right into the lows. Okay? Pretty self-explanatory. And that's where we saw, obviously, Sharpies all in long, the total opposite of the riffraff. Okay? So, again, the backdrop we have already intermediate sentiment. We went over a lot of those indicators on that webinar if you were around. We had sentiment already in the backdrop perfectly lined up. We were waiting on this. This came in, okay? And this is where it's at as we speak right now off the last update. This update's weekly, okay? I'm not going back and showing you at the bottom how these things look. They look like that off the lows, and they continue to look like that now. If you can believe that, going into this week. Okay, maybe it will change after this week, but this is what they look like coming into this week. Okay, I had no idea the market was going to be up like this today. All right, so that's the riffraff, that's the Sharpie money, and I got one more thing to show you here. Okay, oh, I got two more things. I got two more things, two more presents for you guys. This came out today, okay? And this is out of Bank of America. You guys see me post a lot of their stuff, a lot of the sentiment stuff, okay? This is cash, okay? The gray shading in the background, okay? This is a cash position that investors are in, all right? And you can see the magnitude of the spike there, okay? So that's how much cash clients have raised out of fear of being long risk assets, being long any assets, to be honest. They were selling bonds, stocks, you name it, all right? And, you know, worse than 9/11, worse than, as you could see, all the way back to the tech bubble, where it came later on in the tech bubble. Right? Oh, no, tech bubble was 2000. Oh, wait, that's 9/11. My bad. So it wasn't worse than 9/11. I'm looking over here, 9/11. 9/11 was here. So a little less than 9/11. That 9/11 spike, which if you can make that out, I don't know if you guys could see that far, but that intermediate low right over here. See that? And then you see the squeeze. All right, so you see my point? This is what we were talking about, not to flip backwards now, but even though the market may have needed to go lower, okay, when sentiment was at such an extreme, you see the rally, the snapback rally that happened there before it rolled over? Okay, what do you think happens to all the mopes that are short during that? You think they sat in their shorts? They were confident? What do you think happened? You know what I mean? They wear them out. And that's another thing. Can I tell you this, okay? Bear markets, all right, don't let the title of the market fool you. They're the toughest things to short in the world. In the world. There's nothing more difficult than being short in a bear market. Nothing. You have an easier time in a bull market shorting than you would in a bear market. I kid you not. Okay, why? Because the rallies are vicious. Extraordinary rallies, and you never know which one's real or fake. What do you think? They announce it to you? Right? So it's not like you could sit through it and say, oh, yeah, this one's just a bear market rally. It's going to end tomorrow. You would have got annihilated already if you did that. They are so difficult, and the moves are gigantic, right? I'm talking about now building positions short and sitting in it, because that's the way a lot of bears talk, right? Bears aren't, when you hear these bears on Twitter, they're not talking about, you know, day trading and playing off momentum and making some money on the short side. They're talking about legging into short positions like He-Man and sitting in them and catching the big kaboom. That is so far from realistic, it's ridiculous. All right? Impossible to do. And even harder in bear market rallies. Okay? The easier short trade, if you were looking to play like that, is when markets are range bound, right? So you short at the upper end of the range, and you're looking to cover at the bottom. I mean, the vice versa. I was right. Short at the upper end of the range, cover at the bottom end of the range, that sort of thing. But shorting bear markets is impossible. Impossible to do it consistently. All right, so that's my point. That again, whether you're bearish or not, it means absolutely nothing about what's going on right now, okay? Because you could be bearish and right, and you can lose all your money, right? You could be bearish and think you're smart, and you can lose all your money. And it's not about being smart in this game. It's about making money. That's all. That's the only score that matters. The only score that matters. All right, so here, as of today, this was today, largest cash position since 9/11, okay? Which is pretty noteworthy, right? Right. And speaking of shorties, here we have a chart showing some shorties, okay? So the lines I want you to keep an eye on is this line green line, because it gives you sort of a big picture type thing. All right. And what's scary about this, okay, is a lot of the short covering rallies that I've been a part of, this line, green line with the red line, get wiped out. They go from here to here. This thing didn't even budge yet. This thing didn't even budge yet. Okay? Which tells me that there's not as much short covering as you may think out there. It seems broken. You're right. You see here? Here's a good example, right? Now, you can see the difference, right? So this is, look at this, okay? I mean, this is amazing right here. This is the 2018 correction, guys. Remember how spooky that was around Christmas with the low liquidity? Okay? So here's where the shorts got up to, right here, okay? And then look at this. Early on in the squeeze, look what happened to this thing. Whoop! They panicked and covered, right? And you could see the purple line, what happened to the market. Okay? Look here. Well, no, this is into today, Tree, into today. We'll see tomorrow where this is. All right? So, you know, again, this is what moves markets. This is what makes up markets, right? You ever wonder why, like me and Carney, Nick, we're talking like space. You know, why a stock like that goes higher and has a run like, so, you know, it's sentiment, it's short covering, you know? So it's extremely important not only to notice, but to pay attention to. And, you know, you have to be smart about it. You can't be stubborn. You know, I had this little discussion with people on Twitter yesterday. You can't be stubborn, right? Fine. Like I recommend for anybody who's new out there, take the short side and throw it out the window, okay? Learn how to play this game on the long side first, okay? And then if you realize you got a knack for it, then, you know, dip your beak on the short side and lose your money. I don't give a shit, okay? But if you're new and you're just trying to figure out this game, take the short side and flush it down the toilet bowl, okay? Because that's how difficult it is, okay? It's just, in my opinion, it's not worth it, all right? But we know people are stubborn and they want to be Jesse Livermore and they got to play both sides, blah, 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 blah. You can't short into this, okay? Especially if you're a member and I'm pumping this shit down your throat every day, right? Every day I'm talking about this. Every week there are 2 webinars on this. That's all I talk about is this. You cannot short into this. You can't, okay? And I said to like somebody on Twitter, you're worried about what? The one time your gut is right and the rest of the riffraff may be right, and you're worried about missing that one trade? What about the other 9 out of 10 that you're going to get run over and lose all your money? You know, right. Saeed, that's the kicker right there. Not only that, okay, let's say you're short and you covered. You know what, Jesus, I was short, but I covered, the signals finally made a dent. I covered and I got out of the way. You still missed a long opportunity that was pretty incredible, right? So that's why, like when I say, I'm not trying to be a wise ass. When I say stay away from swinging shorts, okay, I say it for a reason. What I'm saying is to mentally be prepared for, especially in this climate, the long setup. Not many people can be short, cover, flip long with confidence. There's not many people who could do that. Now, you may be the exception, but whoever 200 of you on this webinar aren't. You know what I mean? And you got to be honest with yourself. Right? Stop trying to impress people. No, there's no rule. You have to tell people what you're doing, how you're making money, what you're trying to do, right? Oh, I don't play the long shot. I'm embarrassed. I'm not a real trader. Who gives a shit? You're looking to make money in this game, right? Whether you're playing it casually on the side, you're working for a living, or you're trying to do this for a living. But it's like someone just said, it's mentally exhausting, right? Just on the long side, and the market goes up a lot more than it goes down. It's mentally exhausting just waiting for those setups and being smart about entries and stuff like that. So you think that not only you're going to nail the long setup, but you're going to nail the top and catch that one too? And then what? Catch the bottom and the long side, and then short and then long and then short and then long? Like you have a remote control? Good luck. Good luck. The goal, again, the goal, especially if you're like me, right? And you don't trust your instincts, right? If you come to the realization that you're wired like most other human beings, and psychologically, mentally, emotionally, right? You're going to feel negative when things are bearish, and you're going to feel giddy when things are bullish, right? That's how most people are wired, okay? Then what you have to strive to do is you have to strive to get signals that allow you to put your money to work near the right places. That's what it comes down to. That should be your goal. And that's what these signals are for, right? That's what these signals are for. All right. Does anybody have any questions? So, and I know I'm going to get this question. As of going into this week, right, everything was still a go. We spoke about that, right? We spoke about that even last week. Everything is still lined up, okay? Even though little by little, we'll see how much damage was created off today's rally, but little by little, we're going to start to lose that sentiment support that we had. It's only normal, right? You see them flipping on CNBC like pancakes, one by one. Don't chase the rally. Don't chase the rally. Retest. There's going to be a retest. Okay, chase the rally, right? One by one, they're starting to do that. Okay, the more they do that, the more we're going to see sentiment get away from us. Okay, the longer they hang around, and if the market gives us some weakness or give us a chance for them to hang around, then we can enjoy this uptrend for that amount of time, right? And here's the other thing too I want to make a point on. If you remember, we spoke about initially, right at the start of this, or Super Saiyan Blue, that look at the market, pay attention to the market, the overall market, right? The signals are telling us be bullish the market. Don't worry about individual names, right, yet. Let sweepers come to us, Don't be worried about what names to get your hand on. Like if you can, you want to get something high beta that you know is going to rally with the market, or just make a play on ES, SPY, QQQ to start, right? You remember that conversation. Now I think we're going to be entering a period, okay, for as long as sentiment lasts, where stock picking could come back into play again. Okay, we're already starting to see signs of that, right? The last couple days or so. So now I think after this move here, right, until we get some sort of pullback or rest, that we focus on the sweeper activity in individual names and the setups in individual names more so than the overall market. Okay, because like I said, even though the weekly signals, and we'll see where they end up this week, depending on what the market does, I'm sure, but even though everything is still lined up, you know, you don't want to come in and just start chasing highs and get long, because Jesus signals are still bullish. You know what I mean? We want to be smart about it. So if they start coming in exactly, Tree, and hammering names like they did in AAP, right? Or names that might be better set up, or names that are catching initial activity, you know, that's the stuff we want to trade now. And what that allows us to do, if the market does breathe a little bit and they continue to hit names, again, initial activity. I'm not talking about Tesla up 350 points and catching sweeper number 85. Okay, I'm talking about sweeper number 1. Okay, if they continue to hit names, even if the market hangs around, we can find outperformance in individual names. Okay, because I told you, a lot of times there's a rally and then chop, but there's a lot of money to be made in names during that chop, if that makes any sense. You know what I mean? And one more point, and then I'll take some questions, okay? So we know for the future, okay, we review it. Like I said, we want to get better at the approach each and every time it's presented, right? That should be our goal. Okay, it's not about how much money we make, right? Or I should have made. We're always going to complain we never had enough. Always. I do it. I've been doing it for ages now. Okay, always complaining. Okay. But what you want to do is try to get better at this, better at 1, waiting for the setup, and 2, attacking the setup the way you're supposed to each and every time. Okay. But the way, so we know in the future, and I'm working on it as much as I can as well. The initial thing, like we approach this one, you want to be early, right? So in other words, when sentiment gets there, okay, that's when you have to start looking at either the market or names that you like, high beta names. You have to, okay? Because the reason why is this market's so damn fast that at worst case, you have something when this market squeezes and you're not forced to chase. Okay, that's been the one luxury I've had in this rally, that in rallies of the past, I didn't have that luxury. Okay, I had a few names and an ETF that I was early on, okay, and instead of just going out and chasing anything I can, scrambling, I let sweepers come to me, right, and had a couple of days of weakness to buy those names. You understand? So you just think clearer when you don't have to scramble. And with this type, with the market these days, everything's a scramble. It's so damn fast. You know, and exactly, the overnight gaps are nuts, right? It's like they never give you a chance. We'll get a bullish short-term sentiment signal and we're licking our chops, right? Futures are flat or weak when you go to bed, and then all of a sudden you're walking into a monster gap up. So like you want to get your hands on something early, right? So you're like, okay, I got this, and now I got a clear head I could pay attention to the sweeper activity. I could wait for dips. I can do what I need to do. Okay. And the best setups are the ones that come to you, right? You have that little nest holdings, right? That if the market goes up, you're going to make money with. Okay. And then when the market's down, you're not, shitting your pants. Again, excuse my French. You are looking to add into that. So you're looking forward to the weakness. You're looking forward to the weakness. So that's the way we want to approach it. And as far as holding, and you guys give a lot of questions. I'm being honest with you. As far as holding, how long to hold and all that crap, I have no straight answer for you. I can't. I've been working on that and still can't get better at for 20 years. So there's no answer to that. You know what I mean? There's no answer to that. The only thing I could share with you, a bit of advice, is have a game plan before you take the long, right? So at least that was your game plan and you stick to it, because there's nothing worse than deviating from a plan and selling or holding when you didn't really want to be, But the way I'm approaching, like I did a little selling, I'm already kicking myself in the ass about it already. Like I told myself I wasn't going to sell anything until at least sentiment gets to neutral or Sharpies start putting hedges back on. That's what I told myself. And what I do, I deviated, right? So I sold the SE. She bangs out 3 points on my head today, So, you know what I mean? As much as I preach, it's still a work in progress. But that's what we're looking for. We're looking for the extreme intermediate term sentiment to alleviate a little bit, right? Get back to neutral, and Sharpies start to put on hedges. And that's where, you don't rush for the exits. Markets can still go, especially if we're seeing the sweeper activity. But, you raise stops. You're more concerned about losing the profits at that point. You're more concerned about losing profits. Why? Because here's why, all right? If we rally, let's say, I'm just giving an example. Let's say this rally here, okay? And, you did some, what is this? This is not, this is SE. Let me put on SPY so you know what I'm talking about. I'll give you an example why, okay? This is the difference. All right? Let's say you did some buying over here, right? With some time behind it. You bought into right sentiment, you did your thing, okay? You get a nice rally, right? Nice squeeze. But you have time. You don't want, you weren't looking to flip that. You got a sweet spot set up here, right? So you're looking for more reward, okay? This is not going to throw you off your game, okay? Because the likelihood is intermediate term sentiment is still set up off of this. You understand? So if we still have sentiment and Sharpie support, we're looking to buy these dips. We're looking to add into those dips. You understand? Now, as we go higher, we lose support of our signals. Then, we're more concerned about giving back the profits we may have. Right? Because you would have to wait for that setup again, which may be too much downside for you. So that's the difference. That's the difference. All right, let me get to some questions, and then we'll get to, I guess, a few names if you guys want. I'm not sure, even with the rant early on, I'm still going to get the questions on the same names that are up a gazillion points, but whatever. Let me open this up wider so I see everybody here. If you asked a question already, re-ask it, because I wasn't even paying attention to you. Hold on. This is in chronological order? Yeah. Yeah, Amazon, I mean, that's been psychotic, That's been psychotic. That's been psychotic. If you were fortunate enough, again, there wasn't flow there. There wasn't flow there. But if you were fortunate enough to, this was one of those names you were eyeing, And rather than play the overall market, you were going to make a play on Amazon. You hit a nice one. I mean, yeah, Shop, all these names, even Tesla, AMD, all these names. Tesla's been littered with sweepers. AMD, as always. All these things, you really could have thrown a dart at them. Even Apple has done well. All of them. But now it's a different story here, right? Now it's a different story. Now you want to look to play off dips and pullbacks and be careful of chasing because it's had a big move. It's had a big move. AMD +6 in 2 days. I know, unbelievable. Unbelievable. I mean, this is a go-to name now, AMD. It's another one that doesn't even get talked about even that much anymore. NVIDIA. This thing's a beast. This thing's a beast. Every dip they buy. Every dip. Every dip they buy. Zillow had some buying with some time behind it. Zillow had some buying with some time behind it. It wasn't impressive enough for me. Actually, I think it rolled when I looked at open interest the next day. I think they rolled, if I'm not mistaken. But anyway, it wasn't impressive enough to get me to pull the trigger. But I've missed pullbacks in this name before, and they've been crazy moves. I would probably look for more buying in it for me to be interested, That's what I would do. Yeah, Roku finally got moving. Had some news to help it out. But there was quite a few Roku sweeps last few days. Yeah, the Tilray, I day-traded it, I think just once. But it's more of, I think, Ani shorts that are concerned about a squeeze than them making a bet on Tilray. I think just because of market conditions, there's a big short position, and they got to protect themselves. They got to protect themselves. Yeah, Walmart actually had multiple sweeps just yesterday again. Walmart had multiple sweeps just yesterday again. Oh, the other thing too, just quickly, we have earnings coming up. You know what I mean? So that's another little hurdle in the way. I think post earnings could end up being a nice setup if they buy it. But we don't have to discuss earnings flow and earnings again, right? You guys know, you got to take it down. The flow, you take down several notches off earnings, several notches. So play the earnings run up, but just understand if you're seeing size, the likelihood is because of earnings. Anybody catch this name? This was another name I sold, like the SE, Doku. And this is held up rather well. The Doku. You still have it? It's a good looking stock, this Doku. It's a good looking stock. Yeah, I bought it and then I caught a squeeze and I sold it. I had equity though. I had equity. I didn't have the calls. If I had the calls, maybe you played Iova? A lot of action in that thing. What was the news today, Ani? I didn't even get to see the news. Data. There was some nice buying in this thing. AAP, I'm in September's, yes. I'm in September's AAP. That was some big time action yesterday. Probably Melvin. That's the group who's been involved in that name. Goose, that was interesting action. I didn't buy it, but that was interesting action yesterday. I have it on my screen though. I didn't play any retail stuff. Yeah. Yesterday I bought, I bought like 3 or 4 names yesterday too. And Goose wasn't one of them. But if there weren't other names, I'd probably take a shot with Goose. I'd definitely keep an eye on it for, if they come back again. Yeah. I've new positions you're talking about. I didn't swing anything new out of today. Yesterday I bought, I think 4 names I played yesterday. 2 of them I'm holding on to. I got the 2 I'm holding on to, AAP and BHVN, which I played once before this BHVN, not too long ago. But I still have quite a few swings. McDonald's, I rolled into cheaper strikes. So I still got McDonald's. I still got Boeing, which actually was down today off some news. I also rolled there. I got September, so I got a lot of time there. What else? I got Take Two. I got some time there. So I still have, I got a decent amount of swings left. Like I said, I didn't want to sell any, and I was going to try to go for the jugular type thing. I got a lot of time on Take Two. What are they? I think I have, if I'm not mistaken, I have Jans and Jan Leaps in Take Two. If you can believe that, Yosti. Oh, you have Maze? Yeah, I'm further out. You know where I bought it off of, Yosti? You remember the big action that came in on Take Two? Remember that big size? Yeah, off that action. Oh, by the way, nobody's talking about biotechs. Usually there's tons of biotech questions. Biotechs have been incredible. Like those of you who like to play biotech options, right? Because they're lottos, basically, let's be honest. But they've been incredible and very quietly have been a really, really hot group. Yeah, and you know what's the allure there, Yostis, they're not really affected much by the economy, right? As long as there's nothing systemic out there. And, there's a big move to try to come up with antibodies, testing, and vaccines. So these bios are hot right now, hot. I got a list of names that have been catching action. Yeah, they're movers. See, here's the problem with the little biotechs that annoys me a bit. Because I would like to play the equity on the cheap biotechs, the $3, $4 ones, but those can go to 0. You know what I mean? So it's like buying an option anyway. So it's tough to really, really size up in the equity as much as you would like. That's the problem. But there's so many of them. Yeah, IOVA was a good option play. These type of names you want to play the options because they can move. You know what I mean? And you could put in what you're willing to lose, and you could have that higher reward target. That's what they're for, if you want to play it that way. But there's even the bigger ones, the larger ones, they haven't caught anything impressive as far as flow, but they're seeing like smaller sweeps, like the Lily. Look at this Lily. LLY. Bristol Myers, that's been moving. What was the other one? Oh, Amgen. It's been catching a little flow. Look at this. INSEE. No, I haven't looked at that. I owned it. Oh, wow. They're on fire. mRNA. That's a lot of action there. A lot of action. Laboo. I wonder, I don't think Joey still has that, right? I think that was a while ago. INO. I haven't looked at that either. Let me see. INO. Oh, when was this? I don't remember. Oh, wait. That was in March? I don't remember this move. Maybe I'm thinking of a different name. Yeah, but there's a lot of them. There was one that had some news. The 2 recently, BCRX. That one had caught action down here. Some accumulation, by the way, in this little sideways stuff here. And then you have this recent one. Hold on. There are a lot of stocks. KDMN. They opened up the largest position of open interest a couple days ago. KDMN. You know, these are little guys. $4. There was another little guy they bought a little more of today. ATHX. Is that it? Yeah, look at this. So many. So many. You know, there was flow in these things even when there wasn't much flow for us at all, right? Like that mRNA and all those names, they were buying even when the market was abysmal. So, but if you're interested in this group, you know, they're scorching right now. They're really, really hot right now. You know, you just don't want to chase, right? Like anything else. You're looking to find the next egg that potentially can hatch. You know, that's what you want to do. Especially if there's flow that shows up while they're dead. That's usually a good sign. Yeah, Gilead, I don't. With all the action out there, I can't. It looks okay, but I just can't get myself to buy Gilead. I promised myself a long time ago, the Widowmaker. But there's been a ton of action in Gilead, a ton. You know, this thing has burned so many people, though, that I can't blame you if you don't want to buy it, you know? It looks good. It looks good here. But, you know, scroll back a bit. You know? Look at this. It started to look good here, too. And then rolled over and you got tangled in a web for like a year. Yeah, I'd be careful now with some of those squeeze names that have earnings. If you're going to play them for a squeeze up until earnings, that's a different story. You know what I mean? Just make sure you stop yourself out, do that sort of thing. But don't misinterpret the flow as, oh, they're making a play on earnings. Those are shorts that are caught and they need to protect themselves. Yeah, Sharpies, the thing I showed you, the chart I showed you, is the up to date. They come out weekly. They report every Friday. Okay, so this was as of Friday. Remember, I didn't think we were going to get an update Friday because of Good Friday, the holiday, but we got one anyway. Luckily, we did. You know, luckily we did. So what you're going to see now, you can't see it on this chart here, but what you're going to see now, and a lot may be determined off this, okay? If these guys, if the riffraff stay short, and they do a lot of times, okay? Don't think because the market rallies. A lot of times you'll see this. Hold on, let me move this. You know? Stubborn. They hang out. This is weekly now. So you see like 1, 2, 3, 4, 5, 6 weeks it took them to get out. You know what I mean? Look back here. Okay, this was the start of the rally out of the 2018 correction. Okay, so 2019, we started to rally, and look how long it took them to get bullish. Look how long. Into the high. They're amazing. They're amazing. They really are amazing. They're special people. They're special people. You know, like that's what I mean. How can you look at this and realistically go home tonight, study charts, look on Bloomberg, handicap the markets, and think like you're going to do something constructive? Honestly, like, come on. How can you look at this and do that? You know, this is what And like I said, I'm not ashamed of myself, but this is what makes me get so far away from what I want to do, right? I run away from it. God only knows what I'd be doing in a market like this based off my own feelings. But what made light bulbs go off, what made me see the light is shit like this. Like, look at this, right? The market, coming out of that December 2018 correction, okay? And you remember, Carney, we were talking about this. This was very similar to that setup. They almost nailed the lows, okay? And then as soon as the market started to squeeze, just like I explained to you at the start of this video, guys, at the start of this recording, right? The retail trader who thinks, oh yeah, I can nail the lows, and then as soon as the rally, I can tell it's a bear market rally and I can short there. That's what they did, right? That's what they did. So they got long, okay? They literally almost nailed the lows in 2018, December, okay? And then the first pop, the first week that the market started to rally, they went all in short, okay? And stood bearish. This goes to show you the sentiment. As they were getting run over, they stood bearish all the way till second half of 2019, where they started to feel a little bullish. Okay, this is what it looks like. This is what it looks like there. Where is it? 2018 right here. Okay? So literally, like I said, right, they bought, I think it was right here. So they took a shot. They nailed almost the lows. Okay? And then right here is where they got short, all in. And then this whole rally, keep going, even further than where I got the chart here. The whole rally, they couldn't get bulled up until the tippy top. It's pretty amazing. So before talking about that, what I was getting at is that depending on what they do here, okay, depending on what they do here, is probably going to determine how Sharpies slap on hedges or not. If they stay short, they most likely will remain all in. If they get bulled up, you're going to start to see these guys slap on hedges. And that's what they do. Save and JetBlue News. What kind of news? What could they have? What could they have? Their planes are rolling in the parking lot. Let's see. You got Save up $1 and change. JetBlue, would they merge? Oh, bailout agreement. Airline bailout in agreement. Thank you, Joe. So the other ones are up too, I guess? Yeah, they're all up. They're all up. Can you compare sentiment was 2018 correction with this one on the fundamentals? Mark, I don't need fundamentals. I don't pay attention to. All I can tell you is every correction at the bottom, it looks its worst fundamentally. Okay. A lot of the times it's the Fed that pivots and gets involved, you know, and people are so bearish that they just don't want to see it. But I don't pay attention. Yeah, I pay it. I'm not going to say I don't pay attention because I enjoy following the market, but I don't trade off fundamentals at all. At all. A lot of times, like when I'm long, you know, the fundamentals are awful. All right. Coming out of like 2018, I could tell you this much. I remember it like it was yesterday. coming out of 2018, okay, the semiconductors were the ones sweepers were plowing on the call side. And they were the ones that got beat up the most because of the trade war, okay? And I remember it like it was yesterday. We were going into earnings, right? First quarter earnings, and I remember all the riffraff was saying it. Oh my God, the semiconductors are such a great short squeeze rally. These numbers are going to be abysmal. They've lowered guidance. They've done this. They've done similar to what we're going into this earnings for everybody, but it was the semis then, you know? And what happened was the semis reported earnings. They were a disaster, but they weren't as bad as expected, and the stocks ripped. I remember LRCX was one of the first ones. Look, the beast. Here it is. Look, come on. Now I got a memory or what? Here's earnings, right? Here's that bear market rally they were talking about. And look at this rip off, awful numbers. Here, look at the earnings. They missed by 16 cents that quarter, estimates. But it was interpreted as not as bad as expected. And look at this rip. Yeah, remember DRAM and all that? Micron was getting lit up. They were beating the daylights out of Micron every day in that correction. I remember Texas Instruments. That's one we owned, right? I remember we owned that one. See, same thing. Texas Instruments, earnings, awful, gap up and go. All of them. All of them. NXPI. You could have thrown a dart at any of those semis. So really now there's no sector per se. It's the whole entire market, you know, this earnings season. I mean, they shut down the economy. Everybody knows earnings are going to be a disaster. You know what I mean? I don't think anybody, that's why we're rallying now. Nobody's paying attention to that. I think it's all sentiment that matters here. You know, the sentiment in the Fed. The Fed did its thing. The Fed did more than anybody could have imagined. Anybody could imagine. And supposedly they're not done yet. The Fed did more than anybody could have imagined. And I'll tell you one thing. In 2008, Bernanke called the market bluff. They let Lehman go under. They let Lehman go under, right? Here, Powell, I mean, boy, did he act. He threw in the kitchen sink. He threw in the kitchen sink. You know? So you see the Fed balance sheet right now? It's ridiculous. It's ridiculous. You know, but as we rally, you're going to start to hear people talk about that stuff more because, you know, the rallying, people are feeling bullish. So they're going to start to talk about the positives more. You know, people are going to forget the bad stuff. You know, and that's where when that gets too ahead, that's when we got to be careful. I mean, let's be honest. That's where we got to be careful. You know, we could still play. We could still participate. But remember, Tree, when we kept saying for, what was it, a good month as the market continued to rally, let's stay tactical, right? Let's stay tactical. Don't get greedy. Take those profits and run. Right? Swing trading, I wasn't swinging anymore for a good month. And the market was going up every day. Yeah, exactly. So you make some money, right? You participate, but you don't get caught. You get caught maybe a little bit, but you're not going to get buried. And you have ammo to fire for times like this. Yeah. All right, so we'll see. Again, we look at the flow day to day, right? We got short-term daily sentiment, which basically is our guide for entries, right? We want to stay lower half of squeezometer for entries, right? Put the guns back in the holster when the squeezometer gets with a 6 handle, okay? But we're looking at the things that are most important each and every day. We just got to pay attention. That's it. We just got to pay attention. You know, and you can't, the bias, you got to leave in the bedroom when you wake up. You can't bring it to the game because it can really F you up. All right. All right, guys. I appreciate it as always. Everybody stopping by, chit-chatting. I like chit-chatting with you guys about the market. Again, wallstreetjesus.com. If you have any questions, if you're new, there's also a free trial, no credit card on there. And any questions, you can hit up either myself or Lucci. DeMark Niner. Maybe we'll do another webinar open to everybody on how we use Niners with what we do. All right, Marvin, maybe we'll do one of those. Yeah, basic. Just keeping it basic and basically how we use Niners, you know, because they can be used so many different ways. Oh, all right, Euro time. Definitely, definitely. All right, guys. Enjoy the night. Stay safe. I'll see most of you tomorrow.